Hello and welcome to Accounting Tutorials. Today we're going to continue with our grade 12 paper 1, which was written in September 2023. So we're going to pick up where we left off in the last session, which would still be question 1. So in the last videos, we calculated the value of closing stock for solar panels, 1.1, and then we also calculated the missing figures within our fixed/tangible asset note. So in this video here, we're going to look at question 1.3, which is the retained income note. Now, as mentioned in the previous videos, you can already start by setting up the notes in advance. And then as in when you read the information and you come up across something you might need, you can start populating that. Okay. So we know we are looking at the retained income note, right? And ideally, this will start with an opening balance, beginning of the year, and you would then also have profits for the year, okay? And possibly dividends if the company declared and paid any dividends during the financial year. Okay, and then I'm just going to leave extra lines here in case there is something else we need to consider. But you also know that you will have the balance at the end of the year. Okay. Right, so we've set up our note. Let's just continue reading and see what else has been provided. So we've got the balances as at year end. And included in this table is retained income. So this is the balance as at 30th of June, 2023. Now, you can assume that this is the correct closing balance, unless if anything else has been stated regarding this balance. So I'm just going to add it. Right, so we've got our closing balance in. And I see we also have shareholders for dividends of 260. So now this will be your dividend that you've declared at the end of the year, and it's still outstanding to your shareholders. And the reason I say that is because remember you have, or a company has 30 days to pay the dividend after it has been declared. So you can assume that this is was declared at year end. So that's why it's still outstanding. But for now, I'm just going to leave it as is, and we'll come back to it. So just make a note that there is a shareholders for dividend for 260,000 as at year end. Okay, so additional information. So we've already looked at 1, 2, and 3. Okay, so we can pick up from 4. So a creditor's credit balance of 1,500 in the creditor's ledger must still be transferred to his account in the debtor's ledger. Okay, so this is purely a debtor's and a creditor's entry that needs to be made. So nothing to do with my retained income note, so I can ignore for now. Okay, and then V, a storeroom was rented from 1 October 2022 at 11,200 per month. Rent increased by 7.5% per month on 1 April 2023. Provide the outstanding rent. Okay, so we've been told that there is rent that is still accruing or owing. And if you think about the entry to recognize that, so that'll be to debit your rent expense and credit an accrual or liability. So possibly this will affect my profit figure. So I just need to make a note that there's a possible adjustment to profit. Okay. Right, and all right, so the next, so loan from Sheila Bank. So the loan statement from Sheila Bank revealed the following. So we've got total repayments, including interest, as well as interest that's been capitalized, and the balance is not then given. So this is all from statement from the bank that we received. Again, so this is a balance sheet entry that will need to be made, so I don't need to worry about it for now. And then they've also told us that 20% of the loan will be settled during the next financial year. So that then tells me that of the balance that needs to be calculated. 20% is current, and 80% is what I'll be showing as non-current. Right. Okay, so share capital and dividends. So this is definitely relevant for my note because as indicated, so one of the movements of the retained income note is dividends that's been paid. Okay, so I then need to take this into account. So just as part of my workings, I'm going to include this at the bottom here. So on the 1st of July, 2022, so this is the beginning of the financial year, we had issued shares. So maybe before that, so they've told us authorized share capital is 3 million ordinary shares. So authorized is not really relevant. So that just tells you, how many shares can the company issue out to the market. So at this point in time, we know they've only issued 1,500,000 shares. Okay. So let's just update that. All right. So this is then the number of shares. I'll include the value in this next column here. So we know the number. We don't know the value as at this point in time. Okay, and then on the 31st of December, an interim dividend of 12 cents per share was declared and paid. Okay, so I'm just going to put this down here. Right, so on the 31st December 2022, interim dividend. Okay, and this is 12 cents. So to work out what the value is, I already know what my issued number of shares is. So times 12 divided by 100 because it's in cents. Okay, so then that then becomes my value. So 180,000 is the interim dividend that was declared and paid on the 31st of December 2022. So I can come back here, this note. So I know my interim dividend because I've already calculated it. So equal, so remember that will come through as a reduction of your retained income. Okay, so interim dividend. So that tells me then that there is a final dividend. Okay. So let's continue reading. So on the 1st of March, shares were repurchased at R1.50. The average share price accurately calculated on that day was R1.35. Right, so that's very useful that they've already given you the average share price. So remember, your share capital is not something that is revalued, right? So you keep share capital at its cost, which is the average. So that means if you were to go out, as you've done now, and bought back shares at whatever price they were trading at, which is R1.50, that R1.50 does not adjust your share capital or the value of your share capital. It has to be adjusted by the cost because you're not allowed to revalue share capital. Okay, so that then means this share buyback is going to be recorded at R1.35 for the sake of my share capital note. But again, there's a problem because you actually paid R1.50. So I'll demonstrate how that would then look in terms of, or in the form of a journal, how you would recognize that. Okay. So let's now make a note of that. So this was on the 1st of March, 2023. Okay, so let's just give that more detail. 2023. Okay, so there was a buyback. and it was at R1.50. My average was R1.35. Right. So I don't know how many shares were bought back at that point in time. I only know, the price and the average. Okay. So what we can then do from this point in time is we can actually calculate what the value of the shares that were issued at the beginning were. Because remember, as indicated, so share capital is capped at its cost. So for this average to be calculated, that will mean, it was the full value of the shares and then divided by the 1.5 to get to the 135, which is the average. So I can then calculate what is the value of my share capital at the beginning of the year. Okay. So we have that. So then the next part, actually something that also was provided in this table here, they've already given you the ordinary share capital at the end of the year. So that's something we can already include. So 30th of June, 2023 balance. So we don't know the number, but we know 1755 is my share capital. Okay, so that's the closing share capital. Now, using this information and looking at the rest of the information that is provided here, so no other movement to share capital except the buyback that happened. So it'll make sense. So if you buy back shares, you're effectively reducing your share capital as well as the number of shares that are out in the market. So that's why you have this reduction from 2 million to 1.7 million. Okay, so that means we can calculate the value of the buyback. Okay, so the value of the buyback would then be, if I take my closing less opening, so 270,000 is then the value of the buyback. Now, remember, as indicated, that the buyback is recorded at cost, and cost is R1.35. So that means we can actually now calculate the number of shares that we bought back, right? And to do that, we take the value of the buyback, and we know it is at cost, which is 135, and that gives me 200,000 shares that we bought back. Okay, so then my closing shares, so I've got 1.3, and I already know the value of that because this was already provided for. Okay, but now, remember we bought these at R1.50, right? So we actually paid more than just 270. So how much did we pay? So if I take the number of shares times 150, so I know I paid 300,000. Right, so let me just update this just to differentiate the numbers from the actual value. Okay, there we go. All right, so I can also update this here. Okay, so we know we actually paid 300,000 and there is an excess. And what is this excess? So 30,000 was paid in excess to the cost. And in terms of a buyback, so the way it works is a portion of it is funded through, will be funded through share capital, which is the cost, and then the remaining is through your equity. Sorry, so bank and then which is what you've paid, and a portion of that needs to be allocated to equity if you've now paid a premium over the cost. So if I were to put this in the form of a journal, so I would then debit my share capital. Remember, I'm reducing share capital by that 270, and I would then also debit my equity, so retained income, which is the portion that is funded through equity, which is the excess you've paid over the cost. Okay, and then I would credit bank. Okay, which is then 300. So that is how your journal needs to look, which then means I need to update my retained income note with the portion of the buyback that was funded through equity. All right. So I can just add that row. Okay, so share buyback and link it to my workings. Right, so 30,000 share buyback. Okay, so we've addressed the share buyback. Now on the 30th of June, they tell us that a final dividend was declared. Okay, and nothing else has been stated. So we know our interim dividend that was declared. So we've calculated that as the 180. So maybe just to separate. Okay, so the 80 was our interim dividend, which we've already now updated. And the final dividend was also declared. So we can now go back to our table, and we know 260 is what's sitting in shareholders for dividends. So this is the liability that is then still outstanding. So that will then become my final dividend. Okay, so that's much how I have declared for the year. So full dividend for the year is 440,000. Right, so we now need to find what is the profit. So let's continue reading. Right, so no additional shares were issued during the year. Okay, so there was only share buybacks. So we're happy with that. Okay, so then income tax for 2023. Income tax for the financial year was accurately calculated at 309,000. Income tax is calculated at 30% of the net profit. Okay, so income tax. So we know tax the year is 309. Okay, and we are told that this represents 30% of my net profit. Okay, so this will be net profit before tax, right? Because that's how you would calculate your tax. So you take your net profit before the tax and you times it by 30% to get what the tax value is. So we can actually work backwards now and say if this is the tax for the year and it represents 30%, that then means my profit for the year is 1 million. Right. There we go. So 1,030,000 is my net profit before tax. Okay, but for our retained income note, what we need is profit for the year, which is profit after tax. So after tax, so I can work that out now as net profit before tax minus the tax, which is 721,000. All right, so I can then link my profit. So remember, profit increases your retained income. Okay, so this next part is also okay. So that's just a financial indicator, so nothing to do with your retained income note. So effectively, I can then work out what my opening balance is from what I already have. So to do that, I can then take what is my closing balance, and then working backwards, I would then deduct everything else, because to get the closing, all of these were added. Okay, so 794,000 is my opening balance. And you can also check that by recalculating. So if you were to add all the movements, you should get to the 1,045,000, which is the closing retained income. So I'm happy that my opening balance as at 1 July is correct. Okay, so that's it. So that's how you complete the retained income note.